Hello, everyone. Muhsin, are you here?
Yes, I'm here. Can you give me the I cannot open the video. It says host has stopped.
Just a moment. Give me a second. Turn it on now. Can you try?
Yes. Okay.
I
Got it?
can see you.
Okay. Nice.
Okay, I think we can start. So we have more than 20 participants and they're joining so far. And we have more than 50 registrants and hopefully they will join in the coming time. So I want to thank everyone who joined to this webinar. We are very thrilled. As an introduction, I will give you a little bit intro. My name is Sharu. I am a CEO and CFO at DataTruck. We are a next generation workforce automation platform. We automate everything in trucking for carriers, and I have more than 8 years finance experience. And here with me, Muhsin, who was also, if you give a little bit brief introduction, Muhsin, we can kind of start off.
Okay. My name is Muhyiddin. And actually, I am the partner of the DataTruck. Okay. And also, I am the business coach and the trainer on the financial literacy. And actually, we're working very closely with my partner, Shakhrukh Rahmanov, on the issues of the literacy on the trucking business. And that's why we are also presenting the DataTruck as a partners. Thank you.
Okay, just give me a second. I need to share the screen. So do you see my screen?
Yeah.
Oh yeah, I think we can start. So as we started, this is our panelists. So first I will give you a brief introduction about trucking market, and then we will share more deep dive intro by Muhyiddin about the trucking industry. As you know, we have both of us has more than enough experience to talk about trucking finance. So overall, trucking market is very big market. So it's 875 billion market. Also, there are more than 2 million trucking companies. And then the trucking has 80% of trucking freight is moved by truck companies. It's huge market in the United States, more than 4 million drivers. Also, it's very fragmented market. You know, if you think about it, the top 10 companies only manage about 12% market share. So there's a lot of fragmentation, small companies. In fact, more than 90% of companies in trucking space are less than 6 trucks. They're very small companies. Also, if you look at the slides here, you see that the trucking market has kind of divided into FTL, LTL, and other markets. So FTL meaning full truckloads, over the road, and then LTL means less than a truckload. And if you look at the overall market share, FTL has the highest share in the sphere. Also, courier and parcel and other trucking also kind of part of the 60 billion market case. So overall, trucking is huge market. So now we move to there's a big giant mess in the trucking market. Why? Especially from the carrier side. There are more than 15 platforms overall that carriers have to use, and all of them are not connected. And that also makes, creates a problem, friction when you want to do analysis, financial analysis as well. So these platforms include QuickBooks, bank, factoring company, telematics, Excel, Google Sheets. Actually, there's a curious case that when I talked to one company, they had 30 Google Sheets spreadsheets. They were so proud to say that they have 30 Google Sheets, but it's not kind of proud thing, because having a lot of Google spreadsheets could create a miscommunication and you could lose some money there as well. Also, I want to kind of talk about the operating profit. Operating profit is so much important in trucking. When I talk to a lot of owners, it turns out that a lot of owners doesn't know about their operating profit. When you ask them, what's your operating profit? They don't know it. And that's why it's very important to understand what's operating profit. Operating profit is basically your operating profit divided to your revenue. This is your operating profit margin. And usually in trucking market, if you look at the graph here, transportation, trucking market especially is located here. That says, it's 10 to 20% of average gross margins, right? It's very low. It's not kind of big market like software or other industries. But there's one problem here. What's the problem is that it's a standard deviation. The standard deviation of transportation is higher. If you look from other industry, it's higher. Why? What's that meaning? It's the meaning that from the year to year, your operating profit could go to 2% or 20% or even to the loss. And you have to be prepared. When you're managing the business, you have to know what's your operating profit. Is it going down? Is it going up? And depending on it, you have to look at the spending, because if you have like loss, if you have 2% operating profit, you do have to postpone your investments. Also, one of the things that's really important in trucking is that trucking is cyclical business. There's a cycle every 3 years. There's a crisis in trucking. Right now, this has begun from spring 2023 to 2022. There's kind of ongoing crisis in the carrier side. The markets are low. Loads rates are very low, and this is kind of a thing that 3 years back in spring 2020 the rates were also low, and then everyone knows that in COVID time the rates went crazy. But I think it's wrong to assume that the rates will go like that. And if you go back 3 years, even more previously, it's fall 2017, there was also crisis. By crisis I mean the downturn market. If you go to even further, so every 3 years there's a crisis. So what's the implication here? Implication is that you have to be prepared. Even if you're making 10% margin right now, it doesn't mean that after 3 years when there's a crisis you will make it. Maybe you will make a loss in the crisis time. So you always have to think about that. When you have a crisis, plan ahead, make sure that you kind of have a cost sizing, downsizing strategy, other experiences, and then when it goes up, you will have a good strategy. We hope that this crisis gets away and we will have very good year in 2024. And there's a forecast that United States will host the World Cup, and the World Cup hosting would kind of give a lot of economy kind of boost, and it also kind of gives boost for trucking market as well. Also, it's very important as a trucking person who owns the business, you have to understand your industry operational costs. Operational cost is very important here. So you have to know what's your operational cost per mile. It gives you a lot of insights. In 2022, last year, the operational cost has been $2.25 per mile, $2.25 per mile. The reason of it is because there is a higher driver, but the most important is the fuel cost. It has kind of jumped up a lot in 2022. But if you look at 2021, the rate was 185. The rate was really good. Load rates also were really good. It was really good years in 2021. But going from 2021 to 2022, we see that there's a 25 jump in the costs. So that means, if you look at the pie chart here, the highest kind of cost is driver wages, fuel cost, repair, and the truck payments and insurance permits. So you always have to think about that. You always have to kind of look at your big costs and optimize it as necessary. We did the one operational cost analysis for one trucking company 2 weeks back, and they had $2 per mile, 2023. But it's very important to know that as a good time. Next, we have a trucking is so special market is that you always have to calculate trucking weekly net profits. I think there is no such an industry where you have to calculate net profits every week. At least I haven't seen, because I have been auditor and I have audited a number of truck or number of these industries, and I haven't seen in any industry where you have to calculate net profits every week. And in that sense, trucking is so dynamic, so specific that you have to always calculate net profits. And don't blind yourself with gross board. I mean, your revenue, your gross revenue could increase, but it doesn't mean that you're making a profit. And that's why, I have seen a lot of truck companies who look at the numbers, look at the bank accounts, they have money and they're doing good, but the real professionals who scale up, who kind of wants to big company and get the good service, they always look at the net profits. Also, it's also really important to understand finance role, because your good dispatching, your sales could give you increase in revenue, but it's your finance that saves your business during the crisis times. That's why paying attention to finance could increase your longevity of your company. Also, in trucking, it's so special that there are 4 models in trucking, and each business model is different in its sense. Like, you have an owner-operator model, you have a company drivers, you have a lease and rent drivers, and for each of them you have to calculate different calculations. You have to know nuances, and sometimes, to make matters worse, some companies mix up these models and then have the differentiation in their business. And also, there's no right to consolidate the companies, consolidate the data points. It's also kind of problem, and that's why we kind of create a data track where your data is in one place, every data, and you can see everything in one place and make a meaningful insights. Another aspect of tracking is that it's so unpredictable. It's really difficult to predict the market for a month, let alone a year. So that's why, because there's a spot market and then there's a contract market, this kind of creates kind of friction for us. And 99.7% of small to medium truck companies don't have CFOs in trucking. This is also kind of a fact that, when we look at those trucking companies, they think that their CPA does all of the stuff and they don't need CFOs. And part of the reason they think that way is that they don't understand the role of CFO. I mean, the role of finance director. And I give you kind of brief intro about the difference between CPA accountant and finance director. CPA accountant usually does your QuickBooks. They do tax planning, they do bank reconciliation, they look at the historical information, and they help you receive collections. That's it. They don't go further. But the finance director, finance specialist, they help you with analysis. They look at the analysis by truck, by driver, by dispatch, by your offices, by your geographical. That's very important to get the understanding. Also, they help you to have a forecasting. You can have a forecast. And usually QuickBooks CPA accounts doesn't do that. And the finance professional, they help you with loan financing, cash flow analysis, and if you have a cash shortages, they can also help you with that as well. And also they also help you with understanding your internal control, expense control, and break-even analysis. And so there is some of the kind of experience that we have. We kind of doing the consulting with trucking companies. We find some insights. And those kind of things that you have to kind of look in the crisis times. When we did the reconciliation of their account receivable, QuickBooks, banking accounts, we were able, on average, to find 30K unpaid accounts receivable. And the owners, truck owners, they didn't know about that as well. And there were some owners, they said, there is no such a thing in my company. They were so much confident that when we kind of find out those things, he really tried to pay attention for accountant specialists, invoicing, and look at the account receivable every time. Also, if you don't pay attention to one of the biggest expenses, double insurance, your fuel. So you have to always check your insurance, rent payments, lease payments, because if you don't do that, they might have a double insurance or double rent payments. They might put some invoice, some charges that have been already paid, but they put again invoice. Those are the things that you have to, I think right now we are facing the crisis, but at the same time, during the crisis, only effective the truck carriers survive. If you're not effective, you will go out of the business. That's why it's really important to be effective. Look at your expenses, look at your bank, understand your runway, cash shortages, and then work on optimizations. Also, pay attention to maintenance fee. Maintenance is such an area where if you don't pay attention, you might kind of end up paying 10K, 20K things. And we also had like salary miscalculations, fuel theft, toll if the double charges. But those are the things, you have to look, check, audit, and then improve your financial analysis and financial health of the company. And the last one from me is that when this is a statistics actually, you know, a lot of companies actually close out, not tracking, it's generally taken. 70% of businesses are closed in 10 years. And those businesses fail because the biggest reason is financial problem. It may be capital shortage, wrong investments, no cost control, and lackluster expenditure spending. Those are the things. The other problem is marketing, wrong management, and business planning is not done. And as you see here, financial problem is the biggest chunk of the bankruptcy. And having a great understanding of finance will help you a lot in this sphere. And this is kind of my brief introduction. Now I will give the floor to the Muhuddin, who will talk about his experience and who will go deep dive into the trucking business. Muhuddin, floor is yours.
Okay. Thank you. Thank you very much, guys. And thank you, Shohrukh, for the very good and nice presentation. I think that our participants are very interested to know that the financial issues and the finance is very, very important in the trucking business. And with this purpose, the data track and FinTrack is also very helpful, useful, and very positive instrument and the software to run the tracking business. Okay, so as my name is Mukhidin, as we talked earlier. So I live in the United States, in New York, and the last 4 years, actually, I am dealing with the tracking business, and I have trained a lot of tracking company. Among them, if you know, such companies like the Manas Express, they based in Chicago, Energy Tracking based in Orlando, and I'm the financial partner with the Tracking 42. That's the biggest tracking dispatch company, which is based in Moldova, Chisinau. Okay, and regards what the Shohrukh said, that's true. You know, in my experience, 97% of the tracking companies who are already trained, they do not have the CFO, which is CFO, which is Chief Financial Officer, and even they don't have accountants, and they don't have even simply financial reports. Regarding the financial reports, I would like just to say just the small, very important thing. If you do not have the financial reports, you never know where are you in your business. You never know how to lead your business ahead, and you never know what's going to be with your profit, with your net income, with your losses, and etc., etc. The financial reports, this is something like GPS in your business. And to get the financial reports, what we're doing with my partner, what we are offering to our clients, we try to educate, and we try to to present how to read, understand, and analyze the financial reports in the trucking business. You guys, you're the owners, and you are the owners of the companies. That's not the necessary, to create the reports. At least you have to get some financial managers who have to create the reports for you guys, and you have to understand how to read and how to make the analysis. And basically, that's what we learn our clients, and after that will be much easier to be involved in the FinTrack and the data track platform, and also to be easy to get understanding what's going on in your tracking business through the financial reports. Okay, the next one, which I also faced, and I was surprised, none of any tracking companies, they have a budget. I mean, what it means, the budget. You guys, you have to create your cash flow budget, at least for the 6 months period. That will be the forecast budget. You have to create your budget based on your past financial activity. You have to create the cash budget for your future activity for at least 6 months, and that will give you to predict your cash shortage, to predict your runaway, okay? And plus you will see how much money, how much cash you might be available to have in your company, and you can forecast and you can plan to buy the new assets in the future. New assets, basically that's trucks or trailers or any other assets, you have the plan. On the other side, if you don't have a cash in the future and you see your cash shortage, you will be informed how to predict that cash shortage. Maybe you take some loan, maybe you have to buy some additional trucks, which will predict that cash shortage. In that scenario, cash budget is very, very, very important reports. Okay. Next one, also the main problem which I faced, that's the no ratio of own trucks to finance trucks. So what it means, I got a lot of companies who has 20, 25 trucks and all trucks are financed. That's very, very big risk because it's very, very close step to be the bankers. You guys have at least 10 trucks. I mean, if you have own 10 trucks, you can get the 5, 6 trucks for the finance, which means the ratio is supposed to be about 50%. 5 trucks own trucks and 5 trucks for the finance. Maybe that could be 30%, but not less. Because if your own trucks is around 30%, you can predict your bankruptcy. You can predict your cash shortage. You can predict any issues related to the truck repair or truck crash, and etc., etc., etc. Please just pay attention. Never put the all finance trucks in your company. Okay. Next one. None of any company I have faced have the something like financial target. Financial target, that means you have to, once you make the budget, you have to know what is your financial target in the close future. Close future, 6 months, 1 year, then you have to put the for 1 year, 2 years, 3 years, 5 years. I mean, you have to know where you guys are going to be in a couple of time, and you have to be prepared to achieve your financial targets for the each period of your target. Okay, 6 months, how many trucks you're going to have? 1 year, how many trucks you're going to have? If it is crisis, okay, it's crisis, it's very expensive fuels, it's very cheap loads, maybe you have to sell a couple of your trucks, but not right away. Once you get your financial target, you will definitely know how to achieve and how to get that target once you have it on your company. Next one, no knowledge on business profitability. So what is the business profitability? Actually, talking about the profitability, we talk about the profit or net income. Net income, profit is actually it's same thing. So issue is that a lot of company, they're working for the profit, right? I mean, the idea of any business, not only truck business, any business idea is to get the profit. But you guys, you have to know what the profit is. I mean, what your profit is going to be. When I hear that the truck owner says, "Oh, listen, this month I make $20,000, or this month I make $50,000." That's fine. I'm happy, but $50,000 regarding what? Depends on how much is gross. If your gross is $1 million, so 20,000 is just 2%. It's nothing. Okay. If your let's say if your gross is 100,000 and your profit is 20,000, 20%, that's fine. So I mean, saying that you guys, you have to know what is your profitability, and profitability is the ratio of the net income profit to your total growth. And in trucking business, if we talk only about the own trucks, for the own trucks, your profitability is supposed to be something between 20-25%, not less. Now with crisis, during the crisis, it's supposed to be around 10-12%, but for the regular economy, the profitability for the own trucks group supposed to be 20-25%. This is the standard profitability ratio for the trucking business. We talked about the restaurant business, that's a little bit different. We talked about consultant service, that's a little bit different. We talked about the retail, for example, retail. The biggest retail company is Walmart. So their profitability around 5 to 8%, and that's good. This is the standard profitability. But for the tracking, that's supposed to be 20-25% only for the own trucks. Regarding the owners and lease and rent, we will speak a little bit later. Okay. Next, what kind of reports the tracking company is supposed to have in your portfolio? So the first one, definitely, it's the management report, which shows always the gross changes in your company. So for the management report, we have usually we use TMS, it's tracking management system, and data track is one of them, which we presented in this webinar. Okay, but you know that in the US market, that's a lot of TMS systems. So that TMS system you can use for the management report. But I know a lot of companies, they use TMS, but they do not create the management report. If you create the management report, you see how many trucks was on the road, how much loads you got, how many distance you passed, etc., etc., etc. But besides of that, definitely you have to also create your financial reports, and financial reports consist of the first one, balance sheet, definitely. Balance sheet, you can see your assets and liabilities, which means you can see all your trucks, all your trailers, how much that cost, and from the other side, how much funds or how much money you own for that trucks. That you can see on the balance sheet, on the assets and liability, on the different columns. The next one is the income statement. So the income statement, we definitely need to see the gross of the company, all expenses, and the net profit. And talking about the expenses, you have definitely to classify that expenses. You cannot just put the expenses. You have to make something like classification expenses. And how to classify that expenses? We have very big sessions on our trainings, which is dedicated especially for the expenses in the tracking business. We have the separate session. You know, it doesn't take a couple of minutes. It's quite long story, but you guys have to learn how to classify the expenses in the tracking. Next one is the cash flow report. The cash flow report, that's report where you can see what is your cash. And you know, a lot of companies usually confuse the cash flow report and the income statement. Actually, it's definitely different reports. Cash flow shows all your outgoing and incoming cash, all of them. Then you can see your cash flow on the beginning balance, and you can see your cash flow on the ending balance. So which means you see your money, how much money you have before the new months, then you see all the cash movement, okay? And then you can see the your ending balance, how much cash left on your balance end of the month. But to create the cash flow report, you guys also have to know what is the classification of all items, the cash flow. You cannot put just whatever money comes and whatever money goes out. That's also supposed to be standard accounting classification for the cash flow report. So if you have it, trust me, you will know every penny of your company, where they are, where they're coming from, and where they're coming from, and where you have to pay that money. The next one is a cash budget for the 6 months, but I just talked on my previous slide. The cash budget, definitely. The difference between the cash flow report and the cash budget, the cash flow report, that's the factual cash movement. That's what happened. And cash budget for 6 months, that's your prediction. That's your forecast. This is your cash flow, which you have to see on the future, and you have to predict a cash shortage. Plus, you can predict when you have a lot of cash money, and you will know in advance. You can know how to use that cash money to buy any new assets. Okay. Next, to create that financial reports that we talk about for the previous slide, we definitely have to create the to classify the all track categories. Actually, that's about 4 track categories in the tracking business. That's company trucks, it's owner operators, lease trucks, and the rent trucks. You see, and to create the all financial report with the accurate, you have to create the separate financial reports for the company trucks, for the owner operators, for the lease trucks, and for the rent trucks. Honestly, I never seen any company who made that reports separately. At least income statement and cash flow supposed to be different for each category of the truck. Why? Because first of all, each group of the trucks has a different profitability. For example, as I said, for the company trucks, that's about 20-25%. For the owner, okay, for the owner, we will talk on the last, because for the owner, you guys will be surprised how much is the profitability for the owner. For the lease truck, supposed to be a little bit less than for the company trucks. That's about 18-20%. And for the rent of the trucks, that's supposed to be around 50%, 14-15%. We're talking about the regular market. Now it's crisis. That's supposed to be for the company trucks about 10%, the lease truck about 7%, and rent for the trucks maybe 5-6%. But if you make the right way, and if you control all your expenses, so you will have the profit from all group of the trucks. But regarding the owner operators, that's the very interesting. For the owner operators, the profitability is about 60-70%. And honestly, nobody believe me. They say, how come the profitability for the business supposed to be 60-70%? Yes, it is. For the owner of operators, that's about 70. I know the companies, they have even 80%. Any 80%, I mean, for the every $100 of the gross for the owner operators, they have a net about $75-80. It's really true. It works, and that's the way how the company do. So if you guys interested, if you come to the, if you're interested to know how to make it, just give us a call, or just leave any notes, and we'll talk about it after that. Okay, so next is how to make the classification of the expenses in the tracking business. As I said, that the classification, it's absolutely the different issue, and in our trainings, there's a different session where we dedicate about maybe 1, sometimes 2 sessions to get the understanding how to classify the all kind of expenses in the tracking. First one, and very important, that the all expenses in the tracking business divided by variable and fixed. So the variable expenses, that expenses which occurs only during the movement of the truck. Once truck is on the road, the variable expenses is cured. You know, if you have heard, there is something like expression, which says everybody makes money until wheels are turning, and all expenses are coming until wheels are turning either. So which means all expenses related to the shipment, that's the driver paycheck, that's the fuel, that's the factoring, and some other issues, they all are the variable expenses. And the fixed expenses, that expenses which you have to pay whatever truck is on the road or not. For example, rent of the office, or let's say insurance. So that's the fixed expenses. And you know, to control your expenses, to monitor your expenses, optimize your expenses, you have to divide them by variable and fixed expenses. If you cannot do that, if you do not know how to do that, you cannot control the expenses. But I would like to tell you guys that if you do not control your expenses, then expenses will control you. That's very important. The second scenario is dividing all expenses by direct and indirect. So what it means, direct and indirect. Direct expenses, that's all expenses which is supposed to be the operational expenses. Operationals, which means expenses related when the business is working. The second one, indirect expenses. You have to pay whatever business is working or not. For example, if you remember during the COVID, the cities was shut down, okay, but entrepreneurs still keep paying the rent of the space. This is indirect expense. In tracking business, it is very important. You definitely have to classify direct expenses from the indirect expenses, and only after that, that will be much easy to control, to optimize, and to cut your expenses. And by the way, the variable expenses, fixed expenses, direct expenses, and indirect expenses supposed to be separately per each track. Okay. Okay, so once you create the reports for each classified group of the tracks, so after that, you have to make the consolidation of this whole report. Once you make the consolidation of the different group of the track, you will have your operational income. I mean the operational income for the whole tracking business in your company. So again, first you have to create the different report for the own trucks, owner operators, lease, and rent. You have all of them. Plus, you have to make the separate reports for the trailers. If you have a trailers. So 1, 2, 3, how much? It's five reports. And you have to consolidate. And once you consolidate, you will have the one company report, and you will have the one operational income for the company. And after that, from the operational income, you have to deduct your all office expenses. And only after that, you will have your net income. And once you get your net income, you will know what is your net profit. Right? And next item, I would like to talk about the gross. So, what we talk about? At the company, different trucks makes a different gross. Let's say for the 1 week, one truck makes 5,000, another truck makes 6,000, another truck makes 8,000, another one 12,000, 16,000. I know during the COVID, I saw the truck, they made 20, 25,000 gross quick. That's good. But why we're talking about the gross? You guys, you have to know the number, which is what is your average gross per truck? Okay, what is your average gross per truck? If you have, let's say, 10 trucks, okay, 10 trucks, that means that you have to know what is your average gross per truck. During the regular economy, that's supposed to be $10,000 to $12,000. Now, during the crisis, that's supposed to be around $8,000. So if you have a 10 trucks, your gross supposed to be around $80,000, and your average is 1,000. So that means that, you know, first of all, if you know how much is your gross, average gross per truck, you know how your dispatches work. Second one, if you know the average of your gross, you will definitely control every truck and every truck driver. Okay, one truck made 12,000, the other one made 6,000. You have to control why it is 6,000, and it doesn't matter how much each truck made the gross by truck. But you have to know that the average is supposed to be around $8,000 for today. For the regular economy, it's about 10, 12,000. This is your average. Next, how to calculate the average? How to calculate the average gross? That's very easy. You have just to take all your trucks, and you have to take the gross of all trucks and divide by number of trucks, and you will know how much you gross. If you have a truck which is under the repair, if you have a truck which is was crashed or whatever, so that truck you cannot count it, because that's, you know, you have a reason. Or let's say if your driver is sick and he cannot work, okay, that truck you're not supposed to count. But those which is on the road, you have to count them, and you have to know what is the average. So the next issue is dollar per mile. So dollar per mile, you guys also have to know what is the average of the dollar per mile for your company. Not only per truck, for your company. So what the dollar per mile will give you from the financial manner. The first one, you will see your dispatch efficiency. Today, the average, the positive average dollar per mile, something about $2.3, $2.4. I mean, if the company makes $2.3, $2.4 dollar per mile average, that's a very good number. Okay, and if you know your dollar per mile numbers, you will control your dispatch efficiency. Second one, the dollar per mile will give you understanding your break-even point. I mean, break-even point, that's the point when your income, gross income and expenses equal, when you have a zero profit. So for that purpose, you have to know the break-even point. But for the break-even point, you have to know your dollar per mile. Okay. Next one is a driver's paycheck. Okay, driver's paycheck. Some of the company pays dollar per mile. Some of the company pays percentage, some ratio from the gross. And definitely those who pays dollar per mile, now company pays 55 cents per mile, 60 cent per mile, 65, whatever. So if you know your break-even point, and if you know your break-even point, and you know how much you pay for your drivers, you will know how much percentage from the gross is your driver paycheck expense. Okay, just once again, if you know your break-even point, dollar per mile, and if you pay dollar per mile for the drivers, you can get the number of the ratio of the driver paycheck expenses to the gross. That's very important. Today, that's not supposed to be more than 26, 28%. So driver paycheck not supposed to be more than 25, 26, 28% from the gross. That's very important. So in that case, you can survive on the market. Okay. The next one is the deadhead. Some of the company, they counted the deadhead. Some of the company not counted. So if you count the deadhead, some of company, let's say, pay maybe, I don't know, 50 cents for the per mile, or some of the company pay 25%. So whatever you pay that deadhead for the drivers, that also supposed to be counted for your break-even point. That's also very important. Okay. Also, I know some companies, they have something like local shipment trucks. Local shipment trucks, that's the trucks which are working only in one state and neighbor states. Okay. Plus, they have another trucks which are working the whole country. Okay. They stay on the road, and they're delivering the loads to one state, and it's transferred to the local trucks. The local trucks, they deliver by shippers in the local state. So why they do that? They try to save the time, because the long distance trucks, they do not lose the time on the loading and unloading and shipment. They just bring the trailer, they just pass the trailer to the local trucks, and the local trucks disturbing and dispersing the loads in the local state. Okay. And in that case, you have to count the 2 trucks dollar per mile for the long distance and for the local trucks. In that case, you will know how much you're breaking. Okay. Okay. Regarding the truck payments, so that is also a very, very important issue. The most of the company, they think that the truck payment, or let's say, they have a truck for the finance, and they think that when they pay the finance payment for the truck, they count it as an expense. But actually, it's not the expenses. The truck is an asset. And once you pay for your truck, you increase your asset. The same thing like when you pay for your mortgage. When you pay your mortgage, it's not expenses. When you pay your mortgage, you just pay for you just buy your house. Okay? You buy your house, month by month or year by year. And as long you pay, as less you will pay in the future. So with the truck, you have the same scenario. Once you pay the truck finance, so that means you increase your asset, and plus you increase your capitalization. And capitalization, that's the cost of your business. That's the cost of your company. So please, when you make the expense report, when you make your income statement report, do not count truck payment as an asset. Okay? Because it is not as an expenses, because truck is not expenses. This is your asset. But the interest that you pay for the truck, the interest which you pay for the dealer or for the banks, that's supposed to be expenses. So what it means, that means that when you pay for the truck, you have to separate the part of which you pay for the truck and the second part which you pay the interest. You divide and you count the interest separately in your income statement. So in that case, you will have the clear picture and clear understanding what is your gross total expenses and what is your net profit, right? Okay. Okay, and just talking about all this thing, I would like just to remind you guys again that to know all these things and to understand how to run the company, how to control expenses, how to create all the financial reports, you guys, you have to be prepared with your financial literacy, because financial literacy, that's the very important in your business. You see, if you do not control your finance, then the finance will always control you. And financial literacy, this is something like your GPS in your business. If you don't have a GPS, you definitely someday you go just down under the water. So the same thing will happen with the business. Either you lost your money, either you go to your bankruptcy, or you just, floating on the ocean without the GPS, not knowing where to go and where to fly, right? Plus, the financial knowledge, it's the definitely freedom for you, and financial ignorance is a slavery. Guys, just be prepared for your trucking business with the financial literacy. Try to be educated, because financial education, this is your tools which help you to run your business with a very, very, very high profit. And in this scenario, the data truck is your freedom. Thank you very much, and I appreciate for your attention.
Thank you very much, Muhuddan, for amazing information sharing, and we really enjoyed what you talked. And I think our panelists, we had more than 40 panelists coming up to our webinar, and we enjoyed them. And I think they also find very insightful. They learned a lot of things from you, from your experience. And for those of you, I think if you want interested in a data truck, just you can book a demo with us, learn about our product. We're also releasing our financial automation tool at the end of July, which will help get the finance insights from your company, connecting the QuickBooks, bank accounts, and your TMS systems. And sign up for that as well, and get the early access for our product. At the same time, I would say that I think you can contact Data Truck with the above mentioned kind of and below mentioned the contacts in the screen. And also you can also contact Muhuddan. He is really diligent in his work. He can help you understand some of the questions that you have, and kind of guide you in the right manner. I think at Data Truck also, and by Muhuddan also, you can get the 15-20 minutes free consultation for your business. And once you get the consultation, they will help you to get where you want to be. Also, I think as a kind of, we're kind of closing up our webinar, but I think there were a lot of questions coming from our panelists and from our webinar participants, Muhuddan. And one question is that kind of struck to many is that what kind of strategies you have to do during the time of crisis? I know that I have talked to some companies that downsizing or making efficient kind of work, but what kind of strategies do you see in the current market, and what do you suggest for the owners at this market?
Okay, that's a very good question. That's the question which a lot of companies asking. First of all, it depends on the classified group of trucks in your business. We have to know how many trucks we have, which of them owners, which of them own trucks, which is owners, rent, lease, and etc. First. Second, we have to know your loads. Where you going, guys? east side, east coast to west coast, or east coast to the central, or to the mountain, or whatever. That's the first. Second, different companies has a different strategies just to survive on the market. So I can tell you one of them, which is maybe be interesting for you. I know the company, they have maybe more than 100 trucks. So what they do, they rent truck, and they give the truck for the lease to the drivers. That's zero risk strategy, but this is one of them. That's another, any other options, but if you guys, I mean, as Chokru just mentioned, you see our contact details, and you see my phone number and my Instagram account. So you can guys just contact us, we can talk, and we will see how we can help you. Besides, we have a special training for the financial literacy for the trucking owners, and the training is called financial literacy in the trucking business. So if you're interested, guys, just contact me, contact Chokru. We will talk about that, and we will see how we can help. We can give you consultant, we can give you training, and definitely we also can talk about the in-truck and bit.
Thank you very much for the answer, Muhudin. And there was also one question coming about Data Truck. They want to know about what kind of integrations do we have. So I would say we have more than 20 integrations right now at Data Truck. That includes like most famous ones like Samsara, Motive, GPS, the Telematicus. We integrate with factoring companies like RTS or Triumph. We also integrate with the EFS, fuel kind of pilot. Also Toll, Best Pass, and we also integrate with Power BI. We give you the data analysis, because as you see, our company is called Data Truck. That means the data of your company in one place, and you get the data from it, and then you get the insights from it as well. Also, we are open to any integrations as well, because there are a lot of integrations out there in the market, and they have their own kind of documentations. And if you think that you have some different integration partners, we are open to be partnered with anyone. We are open to partner with ELD companies and fuel cards, tolling, scaling. Also, we also have like QuickBooks integrations for accounting. You can send invoices, driver statements to your QuickBooks. Also, you can also integrate with Paychecks. If you have Paychecks ADP, we can send the driver statements, driver information for the payments to the Paychecks ADP for running your payroll. And as I said before, we have more than 20 integrations right now. We're planning to have 50 integrations till the end of the year. And feel free to book a demo, ask your questions, get the answer for your questions, and we are happy to help you. I think one of the key value propositions at Data Truck is that we help you to scale up your business without increasing your human capital. I think that's kind of the biggest takeaway for Data Truck clients who are using our product recently. I think basically this is kind of an end of our webinar. And I want to thank, first of all, for our attendees, participants who showed up and listened to our webinar. The recorded version of the webinar will be sent to everyone who registered, even though some of the people might not participate. We'll send the video recordings for everyone so that they can kind of look through the material, learn it more, and apply to their business. Also, we want to thank Muhudin for your taking the time, answering the questions, sharing the knowledge. I think everyone found it interesting, and at least they got some insights for their business.
Thank you very much, Chokru. I would like to appreciate today our participants. That was I think that was very useful and very interesting session. And I hope that we will come back soon. We're gonna hold the next webinar maybe next month. But anyway, we will be appreciate for any feedback and for any contact points from you guys. And we'll see you soon. Thank you very much.
Thank you very much. Enjoy your rest of the day. Bye.
Thank you.